Hi, this is Rob with the Oil Trading Room. I'd like to cover some signals that we used on Friday in the room that are typical signals that we use. And this is our main room trading chart. And so let's go over that. First off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. I'm just going to show you some signals here that are bread and butter kinds of patterns that we use in the trading room every day and that we cover. Starting in the pre-session, we had a pattern here where you're double topping, and we call this our dot and go pattern. What we like to see is the dot, and then we go through the 50 line on the trap trader oscillator, and that tells us that the order flow is heading down. That was in the pre-session. Then we came into the main room session and we got a pattern that we call a T2 pattern. When we see the smart momentum going higher while the market's actually lower, and we get the background color change, and especially if we get this kind of pattern, we know that the market is going lower with pretty high probability, about 84% on that particular trade. Here we got what's called a 3 lower dot pattern. And we know that on the color change, that one's good about 75% of the time. We came down and we 5-tick trapped is what we call it, where we go below that last low and we get the reversal bar. And this particular pattern we have is you get the green dot on the red background, and then you get the color change, and then you cross the midline on the trap trader oscillator with the color change, and we know the market's going higher. Those are upwards of over 80% accurate, probably closer to 84-85% accurate for the follow-through. This particular one is another T2. It's a trap because it went through that prior level by 5 ticks, and then we rolled back over and got the color change there, and we got 10 ticks of follow-through on that one. Actually, probably about 13 ticks of follow-through on that one. We picked up another T2 right here to go higher, and sometimes we call that a non-cycling type 2, and the market followed through higher there. Came back up, and we got a dot and go pattern. I forgot to mark that for you, or I didn't see it at the time, but when I marked these, we got the red dot on the green background, and then we got the color change on the reversal bar, and we crossed into the midline on the trap trader oscillator with the color, and we followed through on that one. Here's another dot and go pattern. You get the dot right here, green on red, and then you get the cross on the midline on the trap trader oscillator. You get the background color change, and you come up here. And that was a dot and go pattern. It could also be called a non-cycling type 2 pattern and dot and go pattern. When those two line up, the probabilities are theoretically up in the 90s, about 94% to follow through, and you get a nice trade there. It's another dot and go pattern, a green background with a red dot, and crossing the 50 and the color change on the reversal bar, and it follows through going down. Here we have a pattern that's close to a dot and go. You got the green dot on the red background and you crossed the 50, but you didn't get the color change there, so I didn't mark that one. The market came up and made a high right there. About this time of the day, following this, we knew that the market was heading higher, at least 20 ticks or more, at the 88% probability level. And so you wanted to be sure that you were going to get long on a signal going into this area here in what we call F period, the mid point of the day. And so we got the green dot on the red background, and we crossed the 50 line. Sometimes we call that a midline hook, where you come down and you touch the midline and you go away from it, and then you follow through. This is also a T2 pattern, better than 94%, and then on top of that, 88% that we knew we were going more than 20 ticks higher above that 68.91 level, or 68.90 level rather, And so we knew we were going 20 ticks higher from there. And so the market took off, and that was the one of the bigger moves of the day. These we call midline hooks or midline continuation patterns. The trader oscillator will come down and it'll cross that midline, the white dash line there. Come down, touch it, hook. Come down, touch it, hook. And it's a long, and going up into the high of the day. When we get a really long excursion like this, the market's a little bit overdone, and we know we're likely to get some consolidation. We did find a T2 pattern over in here. The market double topped right there, and the smart momentum was higher, and we got the color change lower into K period. This one didn't quite qualify as a dot and go pattern. It was a little bit short on that. We came back up and we tagged back into this region here, and we picked up another T2 going lower at that point in the day. And that was the day for the room. And that's a typical trading day in the trading room. We use a lot of statistics to know when the market's moving and how far it's likely to move, and that helps us to understand the bigger picture of what's going on. And so when you get those stats that are, you know, it's 88% to head higher 20 ticks, and you're lining that up with the price action patterns and the T2 patterns and things that we've covered here, then you have what I call push-pull. You're getting the signal which is pushing the market higher, and then at the same time you're getting the pull, the stat that's saying, yeah, you're going to go 20 ticks higher 88% of the time. And so we have many of these kinds of patterns that we teach in the room on a daily basis. We'd like to ask you to come join us and learn some of these things. The nice thing about these is they work in any market, and so what you learn there in the trading room you can take with you for life. And so come join us, oiltradingroom.com. Look forward to seeing you in the room. Thank you.